Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is September 16th, 2019, a Monday, and we're going to take a look at the markets and see what's going on. You know, modern monetary theory, basically it's Keynesianism, and it insists that the whole world can just be run by just printing more money. Problem is, the money makes its way to the rich more than to the poor. And also, healthcare. Healthcare is an enormous behemoth. You know, let's open up the charts right here and take a quick look at this. You know what? Let me focus the chart in so you can see this right here. You know, if there was a genie out there, and, you know, like in Aladdin, when they rub the lamp and the genie comes out, you know, and everything, and say the genie said, okay, the genie come out of the lamp and he says, okay, I'm going to make everyone in America healthy again. You know, all the sick. So the genie does his work, you know, and everybody is healthy, raging health, you know. If they're sick and lame, they're able to get out of bed and everything else. You know what? U.S. healthcare spending is growing by 3.9%. It's just about every year it's growing by like 4%, and it's reached 3.5 trillion in the United States alone. Over $10,000 per person as a share of the nation's gross domestic product. 17.9% of the economy. This behemoth. What was originally meant to be something that was not a it's basically Keynesianism has to keep this going. Every second or third house you see on your street is probably a nurse or a janitor that works at the hospital or somebody who cares for the sick and the sick themselves. If the sick were to all get better, well, the economy would completely crash. We couldn't sustain the economy that we have if everyone was healthy. The whole economy. This is a sign that shows you how off-skewed everything is. Now let's take a quick look at China here. It says, in summary, the contradictory trade shocks from the trade wars has been comfortably offset by policy intervention in China. In other words, China's doing the same thing. They're just pumping. It's Keynesianism. How can you run the entire world? Well, they're doing it. But, you know, you just can't make everyone rich. And nobody has to work in the entire world. Everybody can just sit back and everybody can be rich. And everybody can just, you know, by printing money. Money. And just continue on with this. This doesn't actually work. Logic should tell you that at some point, the whole thing's going to collapse. It doesn't work. You know, it can't work. It's almost like somebody saying, well, say some bodybuilder said to you, I can lift 800 pounds, you know, and I only weigh 200 pounds. And he were to put on a pair of boots, and they had straps on the back of the boots, and he said, I should be able to fly because I can lift 800 pounds. And I only weigh 200 pounds. So he grabs the bootstraps and pulls real hard, expecting to fly. This is the same way with this Keynesianism. How can you make everybody rich just by printing money? And nobody has to work anymore. Something's wrong with the logic. But we're going to find out in a big way what's wrong with the logic, because they're proceeding full scale with this thing now. And there's no stopping them. Let's take a look at the gold price real quick. Gold settling back down now this morning a little bit. Right now it's starting to move back down. But you know, it had a spike upwards. It's up $9.20 on the day. It's hovering right around the $1,500 range, just slightly below it at $1,498. Let's take a look at silver. You know, in these kind of conditions where the world's being run by Keynesianism now, and they're going in full hog for it. You know? Things that have real value, like gold, silver, and cryptocurrencies, in these kind of conditions are going to create a Well, I think it's just going to explode suddenly when it actually happens in the end. When this whole thing starts to collapse on itself, gold, silver, and cryptocurrency is just going to take a moonshot, an unbelievable moonshot. We're looking at silver today at 1777. You know, these two assets, gold and silver, I consider them to be extremely undervalued in these kind of conditions that we're having, where they're printing money like crazy. You know, uh, the way I see it, if gold and silver prices continue to be suppressed, and everything else keeps moving up in price, you know, things like copper and things that they used to use, nickel and all these other metals keep going up in price, and gold and silver continue to be suppressed. In the end, you know, when you go to the hardware store to buy something like a padlock, you know, if the say they used to use nickel to plate the padlock, you know, if the silver price stays down and the nickel price keeps going up, or these other things, in the end they'll be plating the padlocks with silver. You know, because it's going to be the cheapest thing around to use. I mean, we're living in a world that's gone nuts. Everything's nuts. Let's take a look at cryptocurrency market capitalizations today. And what we're seeing is a mixed bag. Cryptocurrency hasn't been going anywhere in the last number of days. It's been staying around 265 billion. Today it's 264.3. Last night it started to get a little bit of a lift. It made it up to 267 billion, but now it's dropping back down again today. We're looking at 69.5% Bitcoin dominance. We see the coins, most of them turning downwards today, with the exception of Ethereum. You know, Ethereum and then Stellar and you know, they're the Stellar's just holding its own today. But most of the metals, not metals, I mean cryptocurrencies, are turning downwards today. You know, I almost said metals. Maybe there's some sort of a little link in my brain, you know, between cryptocurrency and gold and silver now at this point, because they're alternatives to the dollar. Maybe that was a Freudian slip. Maybe I'm kind of linking them together a little bit. Let's take a look at the Dow today and see what it's doing. I'm going to have to refresh the page. I started it a few minutes ago when it first opened, and it was down 71 points. Now it's down 76. Not a big drop in the Dow considering what's happened in the world right now. Let's take a look at crude oil. Now this is what's happening. Look at this big spike upwards in price. But you know what? It took this big spike upwards in price, and now it's going along sideways again. It's up $5.56 on the day, which is about 10%. That's not as big as I expected, to tell you guys the truth. I expected, in my calculations last night, I was expecting a 28% increase in the price of crude. That's what I was expecting. And it looks like what we've got today so far is a 10% increase in the price of crude so far today. I was expecting it to be bigger, to tell you the truth, you know, because during my calculations, I figured it was somewhere between 6 and 7% of the world's crude supply was just ceased to function, you know. And I expected a bigger, but we're going to have to wait and see on this situation. This situation might not be over yet. It's still an ongoing situation with the crude oil. Let's take a look now at U.S. Treasuries. And we're seeing it falling back toward the yield curve inversion today, with the short end of the yield curve rising and the long end falling. We're seeing I'm going to tell you, a lot of safe haven asset buyers are moving into these treasuries today. They're not moving it so much into gold and silver. I mean, we're looking at huge amounts of money here to drive the yields down 3 and 4%. You know? And what's coming into the gold and silver was tiny. The amount of money coming into the gold and silver compared to what's moving into these treasury bonds. If these flows reverse, you know, we could see massive amounts of money moving into gold and silver, and money moving out of treasury bonds at a certain point in time. They're going to realize at a certain point in time that that there's only two options for these treasury bonds. One, they can inflate their way out of them, and they can pay them all off, or they can let the system collapse and the treasury bonds become totally worthless. In other words, default on the United States debt. They're not going to ever default. Not as long as they have a printing press, they're not going to default. So these treasuries are going to remain viable. They're going to pay them off and everything. But the dollars that they pay them off in are going to be worthless. 1,000,000 times 0 is 0. Let's move on. We have more to talk about. Now, let's take a look at the U.S. dollar index today. U.S. dollar index is 98.51. It's strong, and it's moving up stronger. So the dollar is doing rather well in this situation of oil prices rising. What's wrong with this picture? With the dollar doing good, with the oil price rising like this. Oil price rising means everything's going to become more expensive. Everything becoming more expensive means inflation. Means inflation is actually making the dollar stronger. Something a little bit wrong with this, you know? It doesn't fit. So, but we got a dollar that's moving upwards in strength, and the reason why is because people are scared. They're moving in, and I said this months and months ago, they're going to move into gold, silver, and the dollar. That's where they're going to go. And the more scared they get, the more frightened they get, the more they're going to move into gold, silver, and the dollar. And they're not going to want to hold anything else in the end if they get scared enough. You know, the market's forming some sort of a double top pattern or whatever. I don't pay too much attention to market patterns, but they're saying this is a big bearish signal, you know. And the markets are overbloated. So what kind of a shock is it going to take to really make the market roll over? You know, I mean, here we've got a big market shock that just happened with the oil thing that just happened, you know, which could escalate out of control. It could totally escalate out of control. And what's the market down today? A measly 78 points. I call this a Teflon market. But you know, when it does roll over, when it does finally roll over, what's going to happen is it's going to be absolutely out of control. And it's going to take a lot to bring it back into control. It's going to take a lot of money printing to bring the market back into the control. And believe me, they will. They're going to bring the market back into control. They're not going to let this thing be cut in half. The market be cut in half. And if you think that the market can't get cut in half, look back to 1973, what happened the only other situation I can find is somewhat similar was an oil embargo in 1973, you know, and there's big long lineups at the gas pumps. The oil price shot to the moon. And what happened? The market fell by 50%. They're not going to let this market fall by 50%. They will directly buy the market if they have to. And they will take absolute control over the market. They will be the only buyer of the market, you know, with funny money. Listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.